Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Megan Brantley, VP of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking Amazon. Stock's up a modest 5% so far this year. Megan has pulled back a little bit, but if you look at retail sales data, it seems like it's okay, but they threw another wrench and another gauntlet into the retail space, saying they're going to expand that same-day delivery for groceries. And that's probably pretty big. Look what it did to Walmart stock last year by them getting more into groceries, right?
Yeah, I mean, Amazon is pretty greedy as a company, right? Isn't it? But this is, I think, a major segment that if Amazon can pull off efficiently and effectively could be a major growth driver for the company. When you look at the opportunity at hand, I think the stat that I've seen commonly referenced in this news is that groceries account for about 43% of retail sales, but only about 15% of these grocery sales happen online. And so there's massive opportunity for growth, and Amazon is sitting on a customer base upwards of 129 million. And so if they can convert even a small portion of these already existing members to start to shift that spend from other grocers to their platform where they're already shopping, the implications could be pretty tremendous. So I think that this is one where, we've seen some impacts on Walmart, on Kroger, on DoorDash, on Instacart. And I think that those fears are very valid because whenever you're considering a consumer who already is juggling multiple subscriptions and, maybe that economy is feeling a little bit tight, maybe they want to drop a subscription. If Amazon can provide them all of these benefits, whether you're talking about Prime Video, whether you're talking about music, whether you're talking about, ordering just via the regular Amazon Prime offerings that existed prior to this new announcement, it's very compelling and very easy for a consumer to say, okay, well, why do I need my Walmart Plus membership anymore if now Amazon can deliver my groceries? So I think that a lot remains to be seen, and we'll be closely tracking sentiment, especially with this launch and overall adoption, but we're kind of watching for those inflows and outflows from consumers who may have previously used a different method, who now may switch to Amazon, and maybe even some consumers who had never really had their groceries delivered before. Now that they already have a Prime membership, they say, hey, wait a minute, I can use Amazon. I just had my groceries delivered this morning before I came into the office. So as a customer, I'm very excited.
Megan, one thing you can count, or a couple things actually, you can count on from Amazon. If you are a high margin business or you are any type of a middleman, they'll attack you and they'll get in the middle there somewhere. They'll either chisel down the margins or they'll interrupt that middleman process. And that's, I think, what they're doing right here. And, this was probably a very easy transition for them to make. They've got delivery, they've got Whole Foods stores. All they need to do is link that up and make it more efficient. Looks like they're doing that. My concern, that was big news this week, and you saw stocks in the other companies sell off. My concern was they dipped after earnings, right? A pretty substantial dip that they've more or less made back this week, and they've had a good week. A lot of it was, the overall news about AWS and their growth wasn't that great in terms of Google Alphabet and other companies and Microsoft Azure. They all grew at better rates than AWS. Is that the biggest problem for Amazon right now? Is the other firm, they're the clear leader, but when you're the clear leader, the competition tends to gain slightly, especially when they're really good, high-quality companies like Google Alphabet and Microsoft. Do they have any threats with AWS, or does the stock activity this week really represent groceries only?
I think that AWS, the point that you make there is a really valid point, and we see that in our data, and we've tracked that in our data for some time. We kind of noted that we see some market share steal from Microsoft, from Google, and we continue to see if you look at the year-over-year web visits for AWS versus Azure versus Google Cloud, they're split. And so definitely that growth in AWS is slowing down. However, as you mentioned, it's still the overall market leader. and still is getting at least a majority of consumer mind share in our book. And we see other levers. I think long term, while that is certainly the weak spot right now, we see a lot of opportunity specifically in its advertising business. I know that was a major growth lever last quarter. And, as Amazon continues to expand its Prime Video offerings and better monetize those offerings via advertising, we see a major opportunity in dollars that are spent in advertising switching from linear to this streaming TV. And especially as Amazon, offers more live sports offerings, this could be another, growth lever that really hasn't been there in the past. So I think that that's the unique opportunity of Amazon, is that when you have weakness in an area like a cloud, this company is so much more than just cloud. And this news this week about expanding online grocery, and whenever you think about its prime retail offerings, that's a great example. And then also, whenever you consider things like advertising and these new avenues of revenue growth that the company can tap into. So I think that, it's certainly relevant to acknowledge the weakness there, and we'll continue to monitor that. But just at large as a company, we think Amazon is doing really well at tapping into and continuing to expand those revenue streams.
Real quick here, Megan, before we let you go, that one chart that you have with Amazon web visits versus the stock price, it's kind of getting bifurcated a little bit. Do you expect maybe that bottom blue line to continue moving to the upside, or are you guys comfortable with that?
So we'd like to see some more movement to the upside. I know that, this is Amazon web visits at large, and right now that AWS that we previously mentioned, that's really weighing on the overall momentum of the company. But on the flip side, we see other levers like Prime and like that advertising kind of helping to balance that out. So we'll certainly be monitoring in the near term. But right now, for us, it looks like Amazon's priced about right. Our score, obviously it's not earnings, and we just had earnings, but our score is pretty neutral right now. But I will say long term, at least in the products that Amazon provides and the feedback that we get from consumers when we're listening on social media, that sentiment is improving. And so for us, that's perhaps the best long-term indicator of future growth. And so we would expect to see some improvement there. And we'll certainly be watching as we approach the holiday season.
All right, yeah. And then maybe results from that 4-day Prime days event. Exactly. All right, great stuff, Megan. Have a great weekend.
Thanks, guys. You too.
All right, that's Megan Brantley, VP of Research at LikeFolio, breaking it down for us.